Welcome to Looking at the Markets with me, David Modell. Today I wanted to discuss a couple of thoughts about options, when I like to buy options, and the kinds that I do buy and the kinds that I don't buy. And of course, the decision is always yours, but I just wanted to give you some food for thought. All right, and today is a perfect day to take a look at these things because these are the kinds of gains that a lot of option gurus will offer or will claim or will promise you um, if you subscribe to their daily alert system or service or whatever. They'll promise 1,400% gains in one day. And then they, as evidence of this, they point to a day like today. Today is August 3rd, Wednesday, August 3rd, 2016. It's about almost 2:30 p.m. Eastern Time, and Twitter is up a little bit over 8%. That's a huge move for a stock. Well, depends on the stock. For some stocks, it's not such a huge move, but that's a pretty big move for a stock. And the weekly August 5th call, at the money call, the 18 call, went up 1,400% today so far, with about an hour and a half left in the trading day. And, you know, that's pretty spectacular. I mean, I won't deny it. And this is why people sign up for option alert services and stock alert services, because they dream about days like this. But keep in mind that there's more than one side. There are two sides to every issue, okay? And if you just look at this side of the issue, then you're not going to have a trading plan based in reality. You're not getting the full picture. Now, this is also an argument that people use as to why they purchase weekly or short-term call or put options. Because sometimes, once in a while, if you're very lucky, the trade will go in your direction very strongly, in the direction you want it to, at the exact time that you need it to, and you can make huge gains like this. All right. And just as a review, by weekly options, I mean the very short-term options that expire. They expire every Friday at 4:00 p.m. Eastern Time. And so weekly options last a week or less, and then they expire. Here's the thing about weekly options. If they go very quickly and very strongly in the direction you want them to go, then you can do well. But that's the only way, pretty much the only way you're going to do well, is if it goes the way you need it to really soon. Otherwise, you're out of luck and you can easily lose your entire investment in the trade. For example, what if you had bet on Twitter going in the other direction? What if you had bought a put? Well, your put option would be down more than half in one day. All right, so if you had put in $1,000 into this trade, into a weekly 18 put for Twitter expiring this Friday, your $1,000, well, you would have lost over 60%. Your $1,000 would go down to $400 or less, and that's in one day. All right, so you know your weekly put and call options can make huge gains, or they can have a huge loss. And that brings me to another point, which is never put your entire account into an options trade. In fact, don't even put half or a quarter of your trading account into one options trade, because yes, you can have huge gains. So it went down a little bit. All right. Went from 1,400% to 900%, but still you can have huge gains, or you can lose big time. and that's just in one day. You know, tomorrow or the next, but by Friday, in a couple days, this could be just totally evaporated, could be totally gone. And another point I wanted to make is that this is a good example of why I purchase long-term options. If I'm going to buy options, I go 3, 4, 5, 6 months out, maybe even longer, but usually in that range. So, for example, today the at the money, and it's never exactly at the money. I mean, it's close, or it's rarely exactly at the money. But I call this at the money. It's really close to the strike price. So if I compare the weekly option to, let's say, um, let's go 3 months out: August, September, October, November. Sorry, 4 months out. All right, and we'll go at the money just for comparison purposes. And I usually don't buy at the money. I usually buy in the money, but I just kept it at the money for this example, just to keep it simple. So let's look at the put option. Did it go down 62%? No. Only went down 16%. That's a lot better. And believe me, it's not fun. I understand it's not fun for your options to get cut by almost 16%, but that's a lot better than 62%. Much better. So when you give your trade time to recover, then it's much more forgiving when the trade goes against you. It's almost like you get a bit of a cushion there. All right, so just a quick example of why I buy options that are long dated, 3 to 6 months out, as opposed to expiring in a week or a few days or even a couple weeks. I don't even do that. And just an example of what happens when a trade, if you're only thinking of how much money you can make, and again, going back to this example, if you're only thinking of how much money you can make and you're not thinking of how much money you can lose, then that's not a good trading plan, and it's a recipe for disaster. So I want you to spend more time thinking about the potential loss than the big home run potential gain. And that's how you have longevity in trading and investing. So I hope this was helpful, and I hope it gave you some food for thought. Thanks a lot. And my name is David Modell. And if you'd like some help with setting up a trading plan or investing or finance, or you just want somebody to talk to about what to do with, with your trading account, well, my name is David Modell, and it's a funny spelling for the last name, Moadel. And you can email me anytime. My email address is davidmodell@gmail.com. Thanks a lot, and happy trading. I'll talk to you soon.